Thank you, Sandil. Good evening, members. On behalf of Management Committee of Tirupur branch of SARCF ICA, I welcome our today's speaker, CA Srinivasan Chennai. Welcome you, sir, for the CPE meeting. And also I welcome the members for the CPE meeting. Today we have a CPE meeting on Union Budget Analysis, Indirect Taxes. என்னன்னா இந்த பட்ஜெட்ல பெருசா ஒன்றும் இல்லைங்கிற மாதிரி யாராவது ஃபீல் பண்றாங்க. அப்படி கிடையாது. ஏன்னா நிறைய ப்ரொசீஜரெல்லாம் நிறைய சேஞ்சஸ் இருக்குது. டாக்ஸஸ்ல இல்லைனாலும் சரி, ரேட்ல இல்லைனாலும் பரவாயில்ல, பட் ப்ரொசீஜரால் நிறைய சேஞ்சஸ் இருக்கு. டைரக்ட் டாக்ஸா இருந்தாலும் சரி, இன்டைரக்ட் டாக்ஸா இருந்தாலும். அதனால கண்டிப்பா இது வந்து வெரி வெரி இம்பார்ட்டன்ட் மீட்டிங். ஸோ ஐ ரிக்வெஸ்ட் தி மெம்பர்ஸ் கைண்ட்லி பார்ட்டிசிபேட் தி மீட்டிங். தேங்க்யூ.
Thank you, Chairman. Members, today's speaker is not new to Tirupur. He oftenly visited both physically and virtually. He handled various sessions in our Tirupur branch. Whenever we require any speaker, immediately if we call TRS, he immediately accepted our invitation. Thank you, TRS, for accepting our invitation. So for the benefit of new members who joined in this seminar, I formally introduce today's speaker, CA Srinivasan. He is a fellow member of our institute and is in professional practice for more than 10 years. His area of specialization is indirect taxation, risk advisory, tax litigation management, venture capital funding, etc. He is regularly taking classes for CA students. He is the trainer for officers at income tax and GST departments and also at Hsn. He trained more than 10,000 finance professionals and students. He is the speaker at various trade associations, Chamber of Commerce and leading colleges. He is a regular speaker and contributor in leading news dailies and television channels. So on the day of budget also, we could see him in Doordarshan on budget discussion. So with these great words, I request TRS to take over the session.
Thank you, Sir Murugesan sir, and also for Sandeep Kumar sir for this opportunity. And there are one thing as regards indirect tax is concerned, budget has has a lesser role to play now. But of course, a lot of changes which keeps happening. It's like post the onset of GST, it is like every 2 months we have a new version of the GST law which is coming in, and it's like a budget only, mini budget every time. In fact, the finance minister, in fact, last time also clarified in the earlier last time budget that going forward budget will not be annual exercise, but rather it will be based on need basis. In fact, if you remember 2020, post this introduction of post the COVID, etc., there were a lot of announcements across the year. So budget has become more of a consolidation exercise. So the announcements and the policy changes has been happening across. So that is one thing. But as regards today's discussion is concerned, I'll just touch upon some of the key aspects of GST from the perspective of planning and some of the key issues. Actually, now Sandil Kumar sir, I was telling him that there is a 2 hours. I thought this 2 hours is for both direct tax and indirect tax together. Then suddenly, I realized that it was only indirect tax is 2 hours. So, but then we have the moment we say one word GST, you have so many questions and so many points to discuss. And we have some specific points, being Tirupur, one of the hubs for exports, etc. There are some of the points which I would like to highlight, which we recently had come across, especially with respect to exports, and which I thought would be useful for members also, and maybe one or two new areas of thinking in this direction. So first, of course, let's budget whatever people have got enough WhatsApp forwards now. Then the official sessions, we get inputs from so many WhatsApp forwards. Most of them are nowadays, sometimes true, sometimes fake, etc. So my role is to just identify where we draw the line, and this areas. So primarily, this budget has amended only customs law. That's it. As is concerned, as everybody is aware, it is only that the government can only propose the changes. but then only after it is formally recognized by across all the states, it will be notified. In fact, 2021 Finance Act amendments were notified by 2022 1st January. Many of the amendments, key amendments, are notified from 1st January 2022, and some of them still not yet notified, and some of them notified earlier. So if you look at this 2022 budget amendments, especially with respect to GST, some of them are more of restrictive provisions as regards ITC availment is concerned. Most of them might take even few months, or if proper representation is done to some key state governments, it might even take a year or so for them to come out. Of course, Council has recommended certain already powers can be bestowed on the governments to notify rules, but then considering the approach towards ITC, etc., there can be a change or time deferment could be there. May not be immediately notified, may take even few months or so to come out. Now, one of the first point I would like to take members' view on this matter is that always the concept of giving benefit. Okay, we always have this concept. The government is executive authority. So this executive authority gives benefits. Okay, now what type of benefits they give? Wherever public utilization of for public funds are involved, and that benefits are given to businesses like subsidies or incentives, that is a benefit which is given. Now the next question which comes in is whether input tax credit which is given, is it a benefit? Is it like a benefit which has to be decided by the executive authority to be conferred to the businesses, or is it a right of every tax paying GST registered person to take the credit? That is the background or the setting in which the discussions are moving towards. To put it very simply, whether ITC is a constitutional right or it is only a mere benefit which has been given a statutory right by the executive authority. Maybe I'll take some of your feedbacks, because with this background, if we get into some of the amendments, it will be quite easier. Maybe members can also put it in your chat box if what is your view on this matter. Or see, one we have to see in the context of evolving jurisprudence, evolving thought process and developments. I'll tell you one example. In 1998, we are handling one case for one of the major automobile companies. Now the issue in that case was that you have this car seat is there. Now below the car seat, this car seat, you have this adjusting rail, which enables the car seat to go front and back. Basically your seat adjuster, which enables them to go front and back. Now the 1998 one judgment is there by Supreme Court itself, which says that that particular adjuster, which is attached to the car seat, is only an accessory. It is just for the purpose of convenience. It is added, and that should be treated as an accessory only, and it should not be treated as a part of a car. It should not be considered as a seat part, but rather it is a mere accessory for a activity. Now this was a judgment by the Supreme Court itself, 1998, 99 or so. Now the department, what it does is it takes that particular judgment, 1999 judgment, and applies it to the context of 2021. So we are now in 2022. After about 22 years, the same judgment, they are applying it and trying to say that what you are doing is not seat part, but rather what you are doing is just a mere accessory, and hence you need to pay 28% GST and not 18% GST. I'm just giving an example of how thoughts evolve. Now, if you look at the evolution process, what could be maybe a accessory at 1999, after that, a lot of changes have happened. There are safety standards changed, technology changes have happened, legal changes have happened. So what was 1999 Supreme Court judgment itself is there. Now department will hang on to the Supreme Court judgment and say you have to go by that. 2021 you can't apply, because the seat adjuster is not merely a part. It's not merely an accessory. If for a short person, it enables him to move forward so that he can use that car. For a big, slightly taller person, he can move backward so that he can use. So it is more, it's not just a convenience factor, it is a security factor. It is now becoming an essential part. In fact, when for accident reasons, if that seat adjuster is stronger, it can withstand the movement of the seat also and helps avoids accident. So what was just an accessory as per Supreme Court judgment 22 years back becomes a part at this moment as on date, because even safety standards say you have to have a seat adjuster. So what we are communicating here is the thought process evolved. It is not a stagnant situation. So we need not hold on to some sanctity judgments just because it has been given by Supreme Court so many years back, because there have been a lot of changes. I'll give you another example. Now, there is always a jurisprudence that whenever there is a beneficial interpretation to be taken, there are two exemptions are given, and one of the exemption can be availed, whichever is most beneficial, or whenever the exemption notifications are vague, rather, I would not say two exemption. When exemption notifications are vague and we can give the exemption, need not give exemption, like that it is coming a little bit ambiguity is there. Normal understanding is we have mischief rule, which says that you go based on whichever is beneficial to the taxpayer. That's the Supreme Court judgment in Sun Exports. There is a judgment is there. That's a 3-member bench judgment was there. It said you go based on beneficial interpretation to the taxpayer. So this is what it was decided 2-3 years back till 2018. Now in 2018, there is a constitutional bench of the Supreme Court which said that the exemption notification has to be read absolutely strictly, because exemption leads to taxpayers' money being given to an individual identified person. So in such cases, whenever there is ambiguity, the interpretation should be in favor of department, not in favor of taxpayer. Like that, the Supreme Court constitutional bench has held. So what was an established position for about 30, 40, 50 years got suddenly changed by a constitutional bench judgment now. By, whether what is right and wrong is a question of perspectives only. But again, it goes based on majority view, at least our system is concerned. So what I'm communicating is input tax credit, coming back to that point. All along, I would say there is a Supreme Court judgment on this matter in TVS Capital itself, TVS Motors or TVS Sri Chakra, one of the entities who challenged the provisions of section 19 of the TN VAT Act, input tax credit, where they said if you buy for 100 and sell for 90, for the difference 10 rupees lesser price, for the loss you have to reverse ITC. Like that one provision was there. That was challenged by TVS, and finally matter went up to the Supreme Court. The Supreme Court held that no, the input tax credit is only a benefit. 2019, the judgment has been delivered. 2000, still it says ITC, input tax credit, is only a benefit conferred on the taxpayer. You cannot claim that as a constitutional right. That's what they're saying. See, you have a right. Once it is conferred, it becomes a right. But that conferring the right itself comes with certain conditions. So the person who is giving you the benefit, which is basically the executive authority, like central government or state government, they can decide what are the conditions subject to which you can get that benefit. So even till 2019, as latest as 2019, the perspective of the judiciary as well as the perspective of the executive authority is only to say that input tax is only a statutory rate. That is, only if it is conferred by the law, you are eligible for. So this is what is the situation. In this context, why it is important is, we have to see the legislative maturity or progression. Earlier, you had prior to 1980s, etc., you had only just taxation. There's no concept of credit there. You have to pay tax on your sales or services or excise duty, whatever. Now, after that, they brought mode VAT scheme. Somewhere end of 1980s, they brought the mode VAT scheme where they allowed tax credit for some of the items. But still sales tax was there where it was only, no credit was eligible. Then you had SENVAT credit being brought in 2004, where they allowed credit for so many items related to both services and goods manufactured. 2001 was that, 2004 has come. Then after that, VAT was introduced in many states, and they consciously taken the credit. Now GST has evolved. So if you look at the progression, the from no credit scenario, it has now become largely credit has been allowed. So it means there is a maturity from the legal perspective. It means when the transition is happening, maybe the court should have interpreted when it was from no VAT situation to VAT situation. Now we are already in a situation where VAT was there, VAT credit was allowed to just GST credit, in which case wherever input taxes it is there has been a challenge. In fact, Madras High Court also, there are some petitions filed on the ground that input tax should not be merely treated as a statutory right, but rather it should also be treated as a property under Article 300A of the Constitution, and hence it should be demand as a right and not merely as benefit, because one of the preamble by the GST law is that it should be a seamless flow of credit. That is one of the promise given by the government and the executive authority. So that is one of the reason we have to look at input tax being treated as a right by constitution and not merely by way of statutory benefit. So that is the reason, in fact, many cases the time limit related to the tax credit has been challenged. That is about erstwhile law also we had this time limit, which is about earlier it was about 1 year, but now they have brought November, September, etc. Even that is also challenged on one of the grounds that you cannot restrict having given the credit to me, that cannot be restricted because of the time limit. So that is one of the point which has been brought in, and in this ground only the 2A versus 3B issue, the issue related to ITC, supplier has not paid the ITC, so buyer should be restricted. So all these has been challenged on one of the grounds that having been an honest taxpayer and having complied with the essential conditions of GST law, we should be allowed. So in this regard, the government has now in this budget enhanced those conditions, or at least they have given indications of enhancement of those conditions. Already, what are the issues faced in the industry? Number one is that 2A versus 3B mismatch has already been an issue going on. Though 2A was only a facilitation measure in the erstwhile period, that's from 2017, and it was supposedly got the recognition only in 2019 October. Even there also, they never mentioned about 2A. They only said supplier has uploaded in his GSTR1. So supposedly they got the sanctity only in 2019. That is also doubtful. So the department has been issuing notices saying that 2A is more or less, 3B is more, even from July 2017 onwards. However, that is, that is a press release. Everybody must be aware that which says 2A is only a facilitation measure. Second important observation is coming from the judgment by the Supreme Court in the Bharati Airtel, which is a recent judgment, where the Supreme Court, though the final decision is against the taxpayer, which said you cannot amend the GSTR 3B, etc. But there is an observation again by by the Supreme Court, where it says that 2A is only a facilitation measure that cannot be the basis for you to rectify the returns, or that cannot be the basis for deciding the adjudication. So that also comes in play. And of course, recently there's again High Court judgment in Gujarat, which has been supported in the Supreme Court on ad alpha technologies. There also the same view is taken that 2A has been a facilitation measure. So, so the concept of 2A has long been disputed. Wherever the assessments are getting concluded based on 2A versus 3B, maybe the taxpayers have to take a judicious call. If the amount is significant, then they may have to contest it before the higher forums also. Number one. Number two is, now that was 2A. Then after that, they brought 2B, which has crystallized the time period on 12th or 13th of every month. It was crystallized. That is, every month, 12th, whatever credit is there, based on that 12th end or 13th morning, whatever, that will be 2B. So that's a static data. So earlier 2A was there, And 2A, on what date we should take the 2A? Should we take the 2A on the date of return filing? Should we take the 2A on the date of GSTR1 due date? Should we take the GSTR 2A based on year-end date? There was not clarity. So they issued some random circular saying that we should take the date on 12th of the month, which was only a circular. It was not having any sanctity. And followed by a legal amendment in the rules, which enabled them to notify 2B. So 2B came into picture. Again, people were going based on 2B with, of course, 5% variation was permitted since 2020. And of course, after that, it has been now from 1st January 2021, they said it is only what is available in 2A can be, sorry, what is available in, again, there was a confusion, 2A or 2B, which one should be taken? Though the law was referring, the law amendment was specific to 2A, the rule was saying 2B. Now in this budget, they have brought 2B, they have brought sanctity to 2B also through law itself. That is, section 16 has been amended to give legal recognition to 2B. That is from this amendment in the budget only, which is not yet notified. So as it stands today, for all practical purposes, legally the law has been notified. Section 16 has been amended to give sanctity to only 2A. 2B is only notified through rules, which goes beyond the section. So if you are going to take credit based on 2A, legally it is going to be valid only. So of course, the department can issue notice based on their understanding of the law. Number one. So this amendment budget has proposed that 2B should be the basis for taking the credit for a particular tax period. Now the next issue which comes in is that of course 2B becomes the basis. In this regard, I would like you to refer to a judgment in these are all observations. It's becoming quite relevant for our day-to-day understanding also. So that's why I'm highlighting it. There was a judgment by our own Madras High Court in a case Reflex Industries Limited. Now in this judgment, it was in the context of interest. So where interest should be on gross or net. That was the issue. That is on gross liability or after reducing input tax credit. So this judgment was given prior to the final amendment by the government, saying that it should be only on net. That was has been notified by the government finally. But then this amendment, this judgment was prior to that. So in this judgment, it was held by the Madras High Court that it should be only on net liability and not on the gross liability, even before the amendment. So if department is going to demand interest for prior periods also, it's not possible because retrospectively, one, the section was amended. Second, it should be on net. That has been made clear by Madras High Court itself, which was not challenged before the Supreme Court also. Now, in this Madras High Court judgment, it was a very important observation made. What it said was that whatever you are paying to the supplier, okay, that is also deemed as tax paid only. So that was the wordings which has been given because which means that it says that your input tax credit or input tax is there is also deemed as tax paid for the purpose of the GST law. That is for the purpose of the section. So you don't have to, when you say tax paid, it is not necessarily your output tax paid. It is also includes the input tax paid, which is to the suppliers. So this is an observation made. This also could be useful whenever we are going to pay interest, number one, or whenever, some cases what's happening is it is crossing a threshold limit for arrest also. Prosecution cases more than 5 crores. There is a liability to get arrested. Potential liability is there. In such cases, input tax credit also is treated as payment only. We recently had a petition filed in one of the cases where it was given by the Madras High Court again said input tax available in 2A is also deemed as tax paid for the purpose of the adjudication. So in which case they said that is also treated as tax paid only, and to that extent interest or arrest provisions should not apply. So like that there is a we had our own one of the cases Madras High Court judgment, and Reflex Industries also has clearly observed this point as such. So because of this background with this context, the input tax paid available in 2A there is a time limit has been fixed that you should take the credit on or before the due date of filing returns for September month of the following financial year. That is financial year 2021 means you are supposed to take the credit on or before 20th of October 2021. This is what was the provision, or date of filing annual returns, whichever is earlier. Mostly 20th October 21 could be the last date. Now in this budget, they have proposed to extend that to 30th of November. So that is from the due date of filing returns for September month has been extended to 30th of November for the year. There's only proposal, of course. We don't know when it will get notified, but that has been the change in the law. Now, we had a very interesting issue for one or two cases. In fact, we now have one case before the tribunal as regards Gst Law is concerned. So the question which come up was, what is meant by taking input tax credit? Okay, that is now there are so many notices being issued saying that you have taken credit beyond the time limit for given for that particular financial year. So what do you think? Maybe somebody can put in the chat box, or even you can unmute and answer. What do you think by taking input tax credit? They say you should avail or take input tax credit. What do you mean by that? So should it be that I should take input tax credit in my GST or 3B, or does it mean that the input tax credit is reflecting in 2B, so automatically I'm eligible? Or will it also include a situation where I have taken input tax credit as a balance sheet asset in my books of accounts and but not in my GST returns? Will that also be considered as input tax credit? Anybody can share your views, because it is quite relevant for the budget proposal also, and also for the Gst provision. What do you think should be meaning of the word taking input tax credit? Any specific answers? So in this regard, there was, I would like to highlight 2-3 points. The word taking input tax credit is not defined. Normally or popularly, we understand input tax credit means it should be availed in our electronic credit ledger. That's how it is understood as. So that means we should avail input tax credit in my electronic credit ledger. It means in the online portal. But nowhere it says in the law that you should do that. However, if you look at the provision also, practically it is difficult for us to take the credit in electronic credit ledger within the time limit prescribed in the law. I will have to give some examples to explain. So if you for example, what the new provision, the new law says is that you can take input tax credit till date, that is before budget. Okay, so the existing one or the old one is that you should take the credit on or before the due date of filing returns for September month of the following financial year. So this is one option. This is what it says. So the new provision says that you can take the credit on or before November end, that is November 30th. This is what the new law says. So now with this context, in fact, I will also give you another example. So earlier Hsn credit was there, okay, previously. Now in Hsn credit, there was a provision which said that you have to take the credit within 1 year from the date of invoice. From the date of invoice or receipt of material, you have to take the credit within 1 year. This was the provision available. So let's say the invoice was dated 13th of May 2016. Okay. Now that person has to take the credit on or before 13th of May 2017. Correct. But in service tax, I'll give this analogy, then I'll come back to the input tax. In service tax, this is the same wordings. What is there in GST, service tax, SINVAT rates, the same. Now it says in SINVAT that you should take the credit within 1 year from the date of invoice. So 13.5 means I can take the credit on or before 13.5/2017. How do I prove it to the department that I have taken the credit on or before 13/5/2017 is a matter of question. Can somebody explain? How do I tell the department that yes, I have taken the credit on or before 13/5/2017? How do you justify that? Anybody who can say? In service tax, we'll come to that. So because what is the evidence? What is the only evidence available? I would say for taking credit is the service tax returns or excise returns. And that was followed by the service tax returns or the excise returns was one evidence. The other evidence, which was the one document number 1, I would say. The other document available was in the Gst Law, they used to maintain something called RG23A2 or RG23C2. In GST also, we are required to maintain same thing only. We are GSTR 3B is there. Then we also have some input credit register maintained as per 35, 36 and all is there, which allows us to maintain certain records. These are the documents available. Now, if you look at service tax or excise returns, let's say if I have availed on 13/5/17, like that specifically I cannot put anywhere in ST returns. I can only say so much credit I have availed, bulk, just like how we are having 3B. 3B also we can avail bulk. Same way, excise returns also we can avail only bulk. We cannot say which date I have availed the return. That you may have a backup working in your own system, etc. But there is no provision in the returns to say that I have availed on so and so date so much credit. Number 1. RG23A2C2 input tax rate register and all your own records. Basically, you can say the ledger account which you are maintaining in your books. That's the record. That's the only place where specifically date wise it will be there. So if you look at excise returns, if you look at service tax returns, let's come to first service tax returns. Now service tax returns is filed 6 months once, which means if I'm a service provider and 13th May 2017 is the date. Let's say I took the credit on the last day. Okay. Exactly on the last day from the date of original invoice, I took the credit. Now, where will I show? Only in the service tax returns, which is filed for that particular period. Okay. Now, May month falls under the period April, May, June period. Okay. So it means April, May, June together. There's only one service tax returns, which is filed by July or August. That time it was only 3 months period. Normally it was 6 months, but in that period it was only 3 months. If it was 6 months, imagine April to September put together. I'm going to file the returns by October 2017 only. I'm going to file. But 3 months means the due date was somewhere August 15, 2017. So it means in that period, possibly I can put it under the column applicable for May month. But still, I cannot exactly say on 13th May I took the credit. I can only say I took the credit in May 17 by showing it in that SINVAT credit returns, the service tax returns, which is filed by October. Same thing for our 3B also. GSTR 3B, I can only say that I have taken the credit, but I cannot exactly say which date I have taken the credit, especially let's say 30th November. They are saying you have taken the credit on 30th November, like that system is allowing. But exactly on 30th November, I took the credit, like that. There is no option to justify. So the only way to say, even to prove that words of the law correct, the only way to say that I have taken the credit on a particular date is only through our ledger account. So what we are communicating is, when I say taking the credit, indirectly the law itself justifies taking credit in the books of accounts also, not necessarily only on the GST 3B. So there's an inherent limitation in the applicability of that particular provision. So that particular provision, when it says November 30th, on or before November 30th, you should take the credit. For November 30th period, I will be filing the returns by December 20th only. Okay, in 3B. So the question which comes in is, so November 30th, I should take credit means, is it means GSTR 3B should be filed on or before November 30th? Or is it that November 30th return which is filed by December 20th? What should be the date? The same thing applies to our previous amendment or before amendment also. it was September return, the due date of filing return for September month. On or before that, you can take the credit. It means, does it mean that I can take the credit in October 1, 2, 3, 4, October 20? Can I take the credit? Because if you see the GSTR 3B, when you file for September month by October 20th, it will say for the period of September. Like that only it will capture. But the law permits you to take the credit till the due date of filing returns for September month. It means for the 20 days also, the law permits you to take credit. But there is no provision to expressly mention in our 3B that I have taken credit on 1st October, 2nd October, 3rd October. There is no provision in the law to say. So the only way what I are communicating is wherever there is an issue coming on time limits, of course, the matter will be subject to very high levels of litigation. Even in the erstwhile law, this question of taking credit has become a big issue. There was a case where, in fact, department itself said that assessee has taken credit in his accounting records wrongly, so he has to pay interest. Like that, there was a question which is raised by the department. But there is a Karnataka High Court judgment on this matter, which says that the assessee has taken the credit, correct. However, the assessee also reversed the credit in the books of accounts before utilization. So interest should not be levied. There was a judgment in Karnataka High Court in Hosram Surya case. So the courts and also the department has been consistently recognizing taking credit in the books of accounts also as one of the ways of take credit. So to make the law true, when you say take credit, you have to ensure that at least the credit is taken in the books of accounts and has been shown as an asset in the books of accounts. So wherever the show cause notice is issued on time limits, if the books of accounts is able to at least demonstrate that you have taken credit on or before the particular date given in the law, let's say post amendment November 30th, pre-amendment it was October 20th. So if that can be justified, then there is some kind of merits in taking that matter to higher forums if the matter is substantial for on time limit grounds. Of course, the entire time limit itself has been challenged, but more than that, this particular issue of taking credit in the books of accounts can be one of the very good grounds for allowing the appeals in this regard. So that is number one. So that is also legally sanctified. So second amendment, the first amendment is 2B has been given sanctity. The second major amendment is the time limit for taking ITC has been extended up to November 30th instead of the original due date of October 20th. So that is due date of filing returns for September month. That is the second important amendment which has been made. So now the third amendment, if you are having any corrections to be done, if there is a correction to be carried out in any, or if you have to issue a credit note, etc. In such cases, those corrections or credit notes, again, the time limit has been extended up to 30th November following the end of the financial year. It means from again September month, they extended that to 30th of November of the following financial year. So that is again another extension which has been granted. Now it says input tax credit. So earlier law also, in fact, there was an issue whether for capital goods it will apply or not. It says in respect of supply of goods or services or both. So it means goods includes, it doesn't say only inputs, it says goods. So which would include the capital goods also as part of this definition. However, presently there is a challenge only in the context of refund scenario where they say capital goods should also be eligible for refund. Like that, there is a writ petition filed, but matter is not yet decided before the Madras High Court in this regard. Right. So now to conclude, number one, taking credit on inferences, taking credit in books can be one of the valid grounds for us to justify time limit issue. And second is wherever input tax credit is being denied on 2A basis, it was actually permissible in our view till October 19. Even after that, it is still permissible, but then it is subject to the levels of litigation. And of course, there is a recent judgment in Delhi tribunal that was in the context of the Delhi VAT. the Delhi VAT also had the same provision just like our GST, wherein it said that only when the supplier pays tax to the government, the recipient will be eligible for input tax credit. This is the provision is there in our GST also. Exactly some wordings are there in the Delhi VAT also. And of course, in recent Karnataka VAT also. Tamil Nadu VAT also brought this provision from 2016. Now, on this context, there is a judgment which has been given, which says that if the payment has been made to the supplier, bona fide belief that the payment has been made to the supplier, and it has been properly declared in the returns, then that will be a sufficient compliance of that particular section. That there is, if there is no mechanism to check whether the supplier has paid the tax to the government as such, especially for this particular invoice, there will be a sufficient compliance if the payments to the supplier has been ensured. Nowadays, this concept of blocking credit because the supplier has not paid to the government has become a huge issue. So the Delhi VAT has given an issue. Of course, there is a follow-up judgment recently, Karnataka VAT also, where they have permitted that you can take the credit based on sufficient compliance if you have paid the taxes to the supplier under a bona fide belief and the goods and services have been received. Possibly, again, I am talking about this because there can be already issues or notices which has been served. Maybe under protest, you can pay the money and contest the same if the amount is significantly involved in this transaction. So that is on the context of 2A versus 3B. So this is about taking credit. Now another which has come up, which of course this budget has not directly addressed, but there are a few points they have come up. Is again the same ITC. The government always feels it is a benefit. That's how it has been viewed. So they have brought in a lot of restrictions and conditions, if possible, under the provisions. And of course, this has been not expressly discussed in the budget speech, but of course, it is there now as part of the law also, where they said that you are not eligible to take the credit, or the government can frame rules that they can restrict the credit, okay, on certain situations. So what are those situations? Let me just quickly explain. Let's say you are having 5 suppliers, okay, A, B, C, D, and E. So these are the 5 suppliers available. Now, for each of them, you have purchased, and the input tax credit available is 20,000. So total input tax credit available is 1 lakh. Now, again, I repeat, this is not notified. It is only that central government can frame rules to empower these points, not just central government, state governments also. Now, this 1 lakh rupees is the credit, which is the eligible credit for us. Now, in this, let's say A is a fresh supplier, is a fresh registration. He has taken a fresh registration, and he has not completed cooling period. Now, the cooling period has not been notified by the government. So this cooling period may be notified by the government, in which case, let's say they are notifying, they have taken a fresh registration, and they have not crossed certain number of days of finishing the registration, then this credit can be denied. So that means the eligible credit can be 0. Even if, so it's a fresh registration person, newly registered, then the recipient may be denied the input tax credit for a certain period of time. After that, it may be allowed, but then for a certain period of time, it can be denied. Let's say it's taken fresh registration this month only, then credit will be 0. Now the next point is B is coming. Now in B's case, what's happening is he has declared 1. In his 1, GSTR 1, totally, like us, there will be so many buyers for him. So his GSTR 1, he has declared, let's say, total liability of 10 lakhs, whereas in 3B, he has declared only 8 lakhs. So in which case, there is a short declaration in his 3B. There is 1 is more than 3B, in which case our credit can be blocked. So our credit may be denied. That means it will not come in 2B. That's what we are saying. It will become it will come in ineligible category in 2B. ineligible ITC in 2B. That's how it will be presented to our case. So that is the second scenario. Now the third scenario, which is envisaged is three supplier gets money from so many various third parties. So I mean he gets goods. So 2A is there, and his 3B is there. And naturally, again now itself there is a notice is getting popped up that more than 10% there is a variation between 2A, 3B, etc. Your liability, I mean, registration could be suspended. That kind of warning is coming. But then if for C it is happening like that, not for us, it's for our supplier C, it's happening like that, then our credit will be falling under ineligible ITC category 2B. That means all these will come under this category. That's what we are coming to say automatically in 2B. So our supplier will be categorized and it will be presented like this. And then of course, I repeat, all these are not yet notified, and it need not be exactly, let's say 10 lakhs and 8 lakhs. The percentage is not notified yet. Percentage could be 10%, it could be notified in the rules, but the percentage is not yet notified. Possibly they may give a gap for some time, then slowly reduce the gap and make it absolutely clear. And then the next issue is let's say D is there. Now for D, his income tax, directors have paid income tax less than 1 lakh rupees. Let's assume in their case, all the directors have paid income tax less than 1 lakh. It means they cannot use fully ITC to pay their liability. That is D, let's say is having D is having ITC of totally 1 crore. And D's liability is let's say 80 lakhs. So it means his 80 lakhs can be fully paid by 1 crore. No need for him to pay in cash. But if D's directors are paying income tax less than 1 lakh, there is a provision in GST which says that if none of the directors are paying more than 1 lakh rupees tax, income tax, or in other 2-3 cases, you are required to pay at least 1% by cash. So that is its liability is 1 crore. He is required to, he can use only 99 lakhs. 1 lakh he has to pay in cash only, compulsorily. This is the provision. Now, let's say D is falling under that category. That is, he has to pay in cash only because his directors are paying less than 1 lakh rupees of tax, etc. So he has to compulsorily, D, which is a company, has to compulsorily follow that provision like that. So in which case, if he has to compulsorily pay through cash, but still he used full ITC to pay instead of paying through cash, then in which case he used ITC to pay his full liability, rather 100% liability, which is not correct. For him, he should have paid at least 1% by cash, but he has done this activity. Then for us, it will become ineligible ITC. Becomes ineligible ITC because he has used some amount of fully ITC to pay this. So what happens now is what was eligible normally has become ineligible because of not our default, but because of the supplier's default. But again, I repeat, these are all not notified. These are all the potential rules which has been framed. And of course, they have said such other class of suppliers. So the such other class of suppliers, we do not know what type it will be. Maybe let's say your supplier has dealt with any fake invoices, or he has received any fake invoices, or he is not, following the registration. His registration got cancelled, revoked, cancelled, revoked. So many situations they can also be notified. But in general, so which means what was 1 lakh credit now becomes only 20,000 rupees of credit. The balance 80,000 all becomes provisional, all becomes doubtful because of these scenarios. If they are rectified for him, automatically for us also it will become eligible. So this is could be one of the big complication. Not could be, definitely it's a complication, and it is all coming out of one basic issue that the executive authority is not fully trusting the taxpayers in this regard. There is a sense of in the name of technology, technology enables, definitely they can enable all these points, but then it has kind of bringing a distrust between the taxpayers and the execution as regards these provisions are concerned. Yes, there are a lot of fake invoices happening. There are misuse of credit is also happening. But then that there are suitable check and balances for those cases available. But then this is another provision which could hamper the actual credit for a particular taxpayer in this regard. Of course, there's no distinction in your supplier. Possibly, if they said that if your supplier is less than aggregate turnover less than 2 crores, and hence for them it should not apply, then in which case MSMEs will not be affected. But then this is a common rule across irrespective of the turnover. So this is one major issue. But as I repeat, 2021 notification came in 2022 budget. 2021 budget was notified in 2022. So this might take a sense of progression, maturity, discussion. And of course, we may have to uniformly represent to governments, especially the the representatives across the states as well as the union government, to ensure that this particular provision is revisited too. Because the more powers vested with the authorities can lead to counterproductive issues also. But then this has been brought in. And this we have to understand in the context of the other issues which comes in. Now, because of all these reasons, your credit, you are not taken. Again, by the next year, November, it has gone. Okay, time limit is over. That means your entire credit becomes lapsed. So 3B, this is a provision which has been introduced, section 38. They have made amendments to bring this. But one thing we have to understand again is this has been brought in as part of section 38. Section 37 deals with GSTR 1. Section 38 originally was dealing with GSTR 2. And it was only dealing with credit matching, reversal, all those things, which was not at all notified. From the amendment, from the first day onwards itself, it is not notified. It means from 1st July 2017 onwards, the 38 section has been kept on hold. It was never notified at all. Now again, they are making a proposed amendment in this section 38, so that there could be a legal challenge to this provision at later point in time. But then we have to keep the clients aware that this is the impact of input tax credit. So they have to choose their suppliers quite efficiently or effectively. Suppliers have to be chosen, or in fact through proper representations have to go to the government in this regard. Now the next major issue, or I would say the amendments which had come is okay. The rest of the things are primarily on the procedural side of things. They have brought some amendments, but then primarily they have brought in this regard about eligibility to credit, etc. And electronic credit ledger balances are cash balance. Normally it was allowed to transfer within the head only. Now you can transfer it from one PAN number to another PAN number also. Okay. That is one within the same PAN number, one GST number to another GST number also. That is one of the facilitation measure which has been taken in this regard. Now this is what the budget discussion is primarily on GST side proposed. But then there are customs related amendments. I would like you to what's happening now is there was one impact or one major judgment which came in 2020. It's a very important judgment. See, we focus primarily on the direct tax side, or now to some extent on the GST side. But then there are so many things happening around customs law and customs matters, and there is a huge, I would say, lack of expert knowledge, or I would say experts present in that area. Okay, largely customs in terms of procedures could be dominated by customs house agents, etc. But based on our experience, we could see that there is a lot of requirement for our expertise and experience in customs matters, which requires our intervention also. I'll just give you examples. There is a Supreme Court judgment which came in 2020 in the context of one company called Westinghouse Private Limited, Westinghouse. So in this judgment, what was issued was, they have done relays. Relays basically used for railway signaling purposes. So they had these relays, which is they used it for railway equipments. So this was the issue was on the classification side. So one of the things which we find now is that there are so many issues coming out on classification. In fact, few days back when we were interacting with one of the government senior government official, they were discussing about classification misuse has been done because of self-assessment. There are a lot of misclassification done due to lack of proper advice to the importers and exporters. So one such issue was this Westinghouse. This Westinghouse judgment has completely turned the tables around, and that has created a lot of uncertainty. So what was this judgment saying is that there are two classifications possible for this railway relays. One is it could be either under chapter 84 or it could be under railway products, which is chapter 86. So chapter 86 means it will go under a higher GST. I'll look at from GST angle. The judgment was from customs angle, but I'm just putting GST context for better appreciation. 28% GST would come if it is part of motor vehicles, etc. Whereas if it is chapter 84, it will be 18% GST. Now that was a specific Hsn code. Chapter 84 is specifically railway relays. I mean, relays is there. But chapter 86 talking about equipments used for railways. So it was 86 was more use based, that is end use based classification, whereas 84 was specific classification for that product. Normal precedents still before Westinghouse is we have to go based on specific Hsn code when it is available. It means chapter 84, 18% should be applied. But then this Westinghouse judgment is a 3-member judgment by the Supreme Court, wherein it was held that you have to classify based on. There are 2 chapter notes is there in the Westinghouse. I mean, in that chapter, chapter note number 1 was talking about you have to go based on specific description. Chapter note number 2 was saying end use based description. This court, the Supreme Court interpreted that when there is chapter note 1 and 2 available, note 2 may also be preferred because it is more end use based. It is more factual based. So factually what has happened, it has been used for railways. So let us go based on chapter note 2, and it said it classifies under railways 28%. So imagine it was a huge impact. So what happened, this has created a lot of issues across all the sectors. Wherever you are doing specific classification, the Supreme Court made an observation that you have to go based on end use based classification. For example, automobile parts. Now, automobile parts seat on its own gets classified under chapter 94, which is 18%. The same seat used for a car, if it is classified as parts of seats, parts of car, there is a heading called parts of car. If you classify there, it becomes 28% under chapter 87. So this Westinghouse judgment created a lot of uncertainty in across all the industries on classification, whether it should be 18 or 28. GST also, by the way, because this has an impact on GST, because in GST, the classifications schedule tariff is based on customs tariff law only. So what is applicable in customs tariff would equally apply for GST also. So in which case, now all companies, my sincere suggestion or discussion would be that it's a very huge opportunity as a professional that you also get into and check whether classifications has been done perfectly or not. There are assumptions being made by the taxpayers. They go by website information, they go based on so many trade websites are there, but nobody gets into the proper tariff and verifies. We just put it in the Google, what is the GST rate for seat? It will pop up 18%, or it may sometimes pop up 28 also. So because of that, they go based and classified. But now you will find in customs every day and day and out, there are so many tariff issues which are coming up because of this Westinghouse judgment. Not just Westinghouse judgment, but in general, classification is becoming a big issue. So if you are someone who has not been focusing on at all on the custom side, it's the right time to start with, because for anybody, we as chartered accountants understand the businesses, the products much better. Based on that, classification can be adopted for. So in fact, just recently there's a circular given by the government. It's a welcome circular. In that circular, they said that Westinghouse judgment has unsettled so many different erstwhile judgments. So because this Westinghouse judgment is related to a case of 1992-93, they said that this judgment, we are not supposed to follow it. The government is not accepting this judgment. Hence, trade formations are required to take a conscious view of this matter like that. So what's happening now? Every product which is end use based classification, they are getting into looking at whether it is correct or not, and they are going to verify whether it is good specific or based on end use. So it is a good time for chartered accountants to get into this issue of classification side, which has become a huge issue now. Even in GST, I'm telling you, there are issues going on classification, and because of the change in classification, rate changes has been quite phenomenal. So it is important that classification has been seen. So this is a Westinghouse judgment. I would request you to also look at the judgment and how this judgment had impact on classification as an issue. So this is in fact recently because of the changes in the international Hsn code from 1st January 2022, India's classifications have been changed. So which means what? Whatever 8-digit Hsn code which we have been using for our product, even in GST, you may have to look at whether that is correct or not in the context of the newly issued set of Hsn code. Just to give you example, we had the same automobile parts, and this is giving this because you've seen this quite often now, is that it was under chapter 9405 9000 earlier. Now because of the amendment in the Hsn code, it is coming under 9405 9900. So there is a change in the Hsn code in GST itself because of the change in the Hsn code internationally and adopted by customs. So I would request you to revisit what was the classifications done across all the products. That is a very important exercise to be done as taxpayers, because most of the people leave the matter of classification to customs or in general to the taxpayer himself. But then we have to look at the legal evolution, and because of this is becoming quite important. In this context, in customs, there have been quite a few amendments which has been made. One major amendment is that, again, this is Westinghouse judgment. I would request you to, if you have not been in touch with customs, please look at the judgment, which is a very good starting point in customs side. The second issue which has come in customs is there is a judgment in Canon India Limited. The Supreme Court judgment has come. Again, so Westinghouse is also Supreme Court, which is in fact against the taxpayer. I mean, in general, in that particular case, it was for the taxpayer, but in general, it was against taxpayer. Canon India Limited has created a huge, impact in customs. So what has happened in department? You have two set of people are there. One is somebody called DGC, I mean, your regular assessing officer, who is your assistant commissioner, deputy commissioner, joint commissioner, etc., up to principal chief commissioner. So that's a normal assessment. Then you have audit. Your audit also is effectively, adjudication. If you look at carefully, even audit cases also, adjudication will be done by the respective range officer only, proper officer only. It will not be done by audit because powers are not there for them to do that. There is one more wing is there, which is called DGGI, Director General of GST Intelligence. Now it's called GST Intelligence. We also have correspondingly for customs, there is something called DRI, Director General of Revenue Intelligence. DRI is there. Now this DRI or DGGI is a all India jurisdiction case. So this DRI or DGGI is an all India jurisdictional authorities. That is, they can issue notices across anywhere in India. They don't have geographical jurisdiction. They have across India, anywhere they can take up assessment. So what happened in Canon India Limited, DRI, like wherever they feel the smuggling is there, misclassification is there, the DRI will come into play. And they will issue the, they will find out and they will issue the show cause notice. And they will get the response. They will pass the order. They will demand all those stuffs was happening. Well, now the Supreme Court gave a judgment in 2020, which said that all issues, all proceedings by DRI, Director General of Proceedings, if they issued like show cause notice, if they passed order, all are invalid. This is a judgment by Supreme Court, because the powers to do adjudication comes from Section 5 and Section 6 of the Customs Act. Now there, the powers are given only for the purpose of, normal proper officer. Proper officer definition is there. In that DRI was not there. There was a provision which says, or such other person as regulated, as notified by the board. So there was a central government notification. Central government gave a notification notifying director DRI officers are also eligible to be covered as proper officer. But then Supreme Court held there was no power in the section for the central government to notify, and the power is only for the board to prescribe the authorities. Central government's notification to notify DRI as proper officers are invalid. So it was held by Supreme Court that the DRI has powers. DRI has no powers to issue show cause notice. They have no powers to pass any order. So any adjudication done based on DRI has become completely invalid. This has created a complete unsettlement. Imagine you have customs notices and it was issued by DRI. Around 50-50 cases, 50% of the cases DRI issues notices for show cause notice, etc. Everything became invalid on one single day after the Supreme Court judgment. And many cases before High Court, Supreme Court, everything got quashed and everything got decided purely based on Canon India. They will just say Canon India, quashed, finished. Even if it's a smuggling case, even if it's a genuine genuine modified case, that is, it's actually there is some smuggling, then it gets quashed because it's gone on jurisdiction itself. Now this budget has notified an amendment. Naturally, this is a big impact. So the budget has notified an amendment. What is the amendment they notified is that any notification given yesterday to notify any officers as proper officer shall be deemed as valid at all material times. That's what they have told. That is, at any point in time, these officers have powers. That's what they have. That is, they have basically given a retrospective amendment to the customs law, and which there's a section which has been notified here. Section 96 has been included recently through this budget in Customs Act, and section 5 and 6 has been amended now to specifically say DRI officers are also included as part of customs jurisdiction at all material times, not only today, at all material times, means starting from 1962 onwards, at all times they will be deemed as valid. Whatever proceedings initiated by them, and it is pending as on the date of, it's a very, very, very important clause. Now what happened? We have one case in Madras High Court pending. The case is that same issue only. It's actually a case of, there is an alleging, the department is alleging that there is a smuggling, etc. So the matter is pending in Madras High Court. Same DRI has issued the show cause notice. It is pending as on date. It is on 4th February. That matter before the Supreme High Court is pending on the validity of the show cause notice issued by DRI. On 4th February, it is still pending. The show cause notice is there. It has been challenged before the High Court and it is pending. Now this amendment has come. It is on 1st February. This amendment has come. It is not yet notified. It is there in the budget bill. The bill is not yet notified. But then in this bill, it has been stated that at all material times, any show cause notice pending as on date. So what it says, if any proceeding is pending as on date based on DRI's powers, DRI's involvement, they all will be treated as valid. That means if a show cause notice has been issued and it has been already quashed by the High Court or Supreme Court or by Sestat, wherever it is, that proceeding ended, it's over, it has become dead because amendment did not take effect. Even today also, the amendment did not take effect. Finance bill is notified, the amendment will take effect. The once the amendment takes effect, it will be at all times. So what the amendment now made is by the government is, once this amendment is notified, on that day, whatever proceedings pending because of the DRI's show cause notices, all will be considered valid. So it means in our case, Madras High Court, 8th February, the matter is getting heard for the DRI's not valid, etc. So as on date, it's not notified. Technically, even if the bill is there, it's not notified. But then there can always be, the court may adjourn and then say on the adjourned date, it might get notified. So as on date, if any show cause notice is issued by DRI, but it is not yet converted into order, it is converted into order, but it is not yet quashed or it is not yet decided finally, then in all those cases, those show cause notices will become valid. That means it is completely changing the, so it's basically like who missed the bus. If anybody's show cause notice was given by DRI and they have not got it quashed, then naturally all of that will become valid, and that proceedings cannot be quashed merely because of the DRI's limitation, etc. So this is the important amendment made in customs in this regard. This is second important judgment and consequential retrospective amendment made. So third one, which was okay. Before, consequent to DRI, one more point I want to say is, on similar grounds, DGCA's power, DGCA, Director General of GST Intelligence, issues orders, that was also challenged before the Delhi High Court, saying that DGGI or DGCEI erstwhile has no powers to issue show cause notice. They can only maybe collect records, etc., but show cause notice cannot be issued, etc. But then in Delhi High Court, the matter has been decided in favor of the department and said DGCA has all India jurisdiction to issue the notice. But though, of course, the matter is pending in Supreme Court, as of now, DGCA has been held as valid only. And there are quite a few precedents where DGCA's power has been protected, because the content of DGGA and content of DRI was different, and hence created an issue. So I'm just keeping you informed. If you get a notice on from DGCA side, it could still be held as valid only and cannot be merely challenged on jurisdictional grounds. The third important point which has come up is, if the basic customs, which is a recent circular which has been given on customs side, if basic customs duty is exempt for a particular product or a particular imported product, then the related social welfare surcharge is also exempt. So there is no social welfare surcharge, that also will be zero, because there is no customs duty. Social welfare surcharge will also be zero. This is a recent circular given by customs in this regard. My suggestion is to slowly get into, maybe if you have clients who's doing imports or exports, even small way, or may have capital goods imports, etc. Suggestion is to look into whether there are customs classification, whether it has been done correctly or not, because now there are exemptions based on FTA, free trade agreement, and these free trade agreements are based on preferential, that is where their country of origin is based on that. So that there's some percentage, etc. is there. It's a very good starting point now because of so many changes which is happening, and because of absolute lack of professionals into this particular sector. Now, one more issue which has come up. It's a very important one. I would request you to also deliberate and think on this issue, which has come up now. We have also now filed a similar proceeding here. Is that, let's say there is a 100% exporter. Not necessarily, it can be less than 100% also. I'm just giving this example for ease of understanding. Now this 100% exporter is there. So he is having inputs eligible, I would say. Eligible inputs is okay. He's having inputs and input services. Input services, you have this blocked credit and all. For example, construction is blocked. Then you have food is blocked, and you have car blocked, etc. Now, so this eligible and ineligible. Inputs largely would be eligible, but let's take for understanding is inputs ITC available is 10 lakhs, and ineligible ITC as per blocked credits is, let's say, 3 lakhs. Now input services 7 lakhs eligible, and ineligible is, let's say, 5 lakhs, like they did a building construction, etc. Okay, ineligible credit. It's an input service only, but it is ineligible because of section 17(5). Now the question is, if I'm doing 100% exports, how much is the refund I can claim? I have answers, please. What do you think is the refund which can be claimed? Any answers in this regard? So how much refund? 100% export only, so there is no domestic. So for ease of understanding, I've given this example. What do you think should be the eligible refund he can apply in this case? Anyone? The answers? This is actually a very important provision. So just and also considering that time at which this is discussed, this is becoming a very important scenario. So the refund which this person can claim is, we all know that we claim refund for eligible, input tax credit. Basically eligible input tax credit. That's what we claim refund. That's what maybe many of us also would have claimed refund. Many of us might be involved in claiming refund, etc. So we would have claimed refund, of course. And what we would have claimed is whatever refund, 10 lakhs plus the 7 lakhs, 17 lakhs. Because naturally the balance 8 lakhs is ineligible. So 17 lakhs we would have claimed refund. That is a normal understanding. That's what, in fact, everybody would have done also. Whatever credit eligible, we would have claimed the credit, because 100% exports, the entire amount becomes eligible for refund. So 17 lakhs. So this is because of section 54.3. 54.3 says you are eligible for refund of unutilized input tax credit. It's assuming your entire amount is unutilized, you will claim entire amount as refund. Okay. Now, what about this ineligible credit? There is an ineligible credit available. So can I claim refund of this ineligible input tax? I would not say input tax credit, but rather input tax. 8 lakhs is there. Can I claim refund of this ineligible input tax? Anyone answer? Anybody's answer? It's a very important provision, especially because we might deal with some exporters also. I'm bringing this point for our discussion, but then it's a matter of test also. So what do you think? Can I claim refund of this ineligible input tax? Any answers? Can say yes or no. So in which case can we claim the anybody? Casey, sir, whether audience are also allowed to chat?
Yes, sir.
Okay. So now in this case, if you look at section 54 of the GST law, this it's a very interesting provision. I'll just also show you section 54 for our understanding. Okay. Look at the law as it is when the law is given. Okay, this is section 54. I'll just blow up a little more. So section 54 says that you are eligible for refund of this is okay, sorry. Yeah. So section 54 says that we are eligible for any person claiming refund of any tax and interest, if any, paid on interest paid on such tax or any other amount paid by him, may make an application before 2 years from the end of the loan year for refund. So the word refund is used. This is any person claiming refund, you have to apply within 2 years. This is what it says. So what is the meaning of refund has been defined in this section itself. It talks about refund. Okay. So that is given at the end of this provision. I'll come to that explanation which talks about refund. Yeah. So here this is explanation 1. It says that refund includes refund of tax paid on zero rated supply. That is basically IGST on exports. Zero rate supply is basically exports or SEZ supply. Refund of tax paid on zero rate supply means refund of tax paid on IGST. Basically IGST paid on export. That is, we know shipping bill we file and automatically based on matching with the shipping bill, they get the refund. Or second is a very important clause, or services, or this goods or services, or both, or second, if I read from here, this clause, it says refund of tax paid on inputs or input services used in making such zero rated supplies. That's all it says. It doesn't say refund of input tax credit used for zero rate supply. It also doesn't say that you should have paid refund on exports. What it says is 2 clauses is there. One is refund of tax paid on zero rated supply. So that is IGST paid on exports. Second is refund of tax paid on, so till here it's common, on inputs or input services used in making such zero rated supply. we might say that this only represents to eligible credit, but law never has intended, because if you see one more R is there, or refund of unutilized input tax credit as provided in subsection 3. So what we are claiming is coming under refund of unutilized input tax credit. So there are 3 refund covered under this explanation. One refund is refund of GST paid on exports. Second refund is refund of GST paid on inputs or input services used in making such zero rated supplies. Third is refund of unutilized input tax credit. So if you apply, there are 3 refunds eligibility has been mentioned here, not 2 refunds. So we all go based on the third clause, unutilized input tax credit refund, which is what we claim proportionately based on export turnover to total turnover. We also claim IGST, but there is one more clause is there. This is coming from the principle, the basic principle of our policy, that whenever export happens from India, you should not export taxes. You should only export goods or services. Taxes should not be exported. That's basically the policy of the government. That's the reason why they are giving refund for all the taxes and duties which we are paying for the purpose of exports. Whatever you are paying, they are claiming refund. So if the intention of the legislation is that you should not export the taxes or duties, which means the related input tax credit, even if it is blocked, that also should not be exported, because that's the intention. Leave alone the intention. Look at the law itself. The law itself has been specifically communicating to us that you are eligible for 3 kinds of refund. If the legislature's intention was only to say you are eligible for input tax credit refund, then there is no necessity for them to say you are also eligible for refund of inputs or input services used in making such supply, when input tax credit refund itself will cover that provision also. This is one part. Now, say is that okay, I will let's assuming we are eligible for refund of, so this means this clause also enables us refund for ineligible input tax credit. Sir, where law says you are eligible for ineligible input tax credit, law need not say that. Law is clearly saying that you are eligible for refund of tax paid on inputs or input services. Simple. Inputs includes all inputs, whatever you are using it for your business, the course or furtherance of business. Input services also includes it. There is no blocked credit in input service definition or inputs definition. The blocked credit is only blocked credit. It doesn't exclude it from the definition of input or input services. Now, do we have precedent? Yes, we have precedent in the Gst Law, wherein refund has been sanctioned on ineligible, that is blocked SINVAT credit. Refund has been sanctioned on the ground that it has been used for exports or export services. But of course, we can't expect this to happen at the officer level. Definitely, this will go through the process of indication, but it's worth the time and efforts, because there is no loss to the taxpayer. Now, sir, should I have already expensed off in my accounts books. Like I have treated that as expense in my accounts books, and I have not shown that as asset, because refund means we have to show it as an asset in my balance sheet. And whether it is a problem, it is not, because whether it is an asset or expense becomes more relevant from the context of unjust enrichment. That is principle of unjust enrichment, wherein you already indirectly recovered it. Then again, you are going to recover it. Then this concept of expense or asset and all becomes relevant. Now, this is in the context of exports. For exports, principle of unjust enrichment will not apply, and that is also clearly given in the section itself. If you find section number, the same section 54, in that you have this clause number 8, subsection 8. It says that notwithstanding anything contained in subsection 5, which is basically unjust enrichment. That is, whether you collect it from your customer or not doesn't matter. The refundable amount shall, instead of being credited to the fund, be paid to the applicant if such amount is relatable to. Now you can see again here, refund of tax paid on zero rated supply, or refund of tax paid on inputs or input services used in making zero rated supply. So in which case, this particular provision makes it amply clear that we are eligible for refund of blocked credits also if it is related to exports. Okay, if I am doing partly domestic, partly exports, in which case I am eligible for proportionate credit. Simple. However, sir, it is there, but where the rules support it? Yes, in rules, there is no specific mechanism which talks about how to claim refund in this regard. Because possibly the persons who have drafted the rules has not visualized the impact of this particular provision. So, but again, when the law has given us the sanctity, we always have the general residuary category. In fact, it says rule 89 says any person claiming refund will file through RFD 01 form is there. So that is a person. For refund of unutilized input tax credit and all, there are specific formula is there. But here, it comes under the residuary category. It means you can try applying for refund of ineligible credit under others category in exports. Sir, can I go back and claim it today? Yes, you can definitely claim it. Of course, the law permits 2 years time to claim refund. So from 2022 February, you can go back up to February 2020. In fact, not now, the Supreme Court extension has come on quasi-judicial proceedings as well as judicial proceedings from March 2020, 14th March 2020. The Supreme Court has given an extended, that is whatever time period expired between 14th March 2020 to now recently in January, they extended it till 28th February 2022. It means we are looking at about roughly 2 years. This is 14th March 2020 to 28th February 2022, whatever time limit expired for any judicial or quasi-judicial proceedings gets extended. Till when? 90 days from 28th February 2022. It means we have time till another 90 days from that date. It means roughly we are looking at 27th of May 2022. So it means what we are concluding is, one, there is a proposition and there is a genuine claim for refund of even blocked credit as regards exports is concerned. Blocked credit could be even car or whatever. If it is used for the purpose of business, it can come under the blocked, even as a blocked credit, so long there is an export proportion available. Let's imagine there's a construction happened for a factory. Now the construction of the factory is blocked credit, GST. But then if there are exports happening from that particular factory, then it could become eligible because of this particular provision in section 54. So you have time for last 2 years by law itself. And because of the Supreme Court extension, any time limit expired from March 2020 to February 2022 gets extended up to May 2022. So in my view, the 2 years time limit, let's say we start from 17-18 GST period. 17-18 GST period, the time limit was 2 years from the end of the financial year. That was the provision. In fact, you can see here relevant date also. So the relevant date definition in section 54 will say the case of goods exported out of India where a refund of tax paid is available, or the inputs or input services used in everywhere they clearly make this point that we are also eligible for refund of tax paid on inputs or input services. Relevant date is the CE exports, all those things they mentioned. So here they mentioned 2 years from the date of exports. Okay, that means if the export, let's say, has happened in March 2018, I'll take the period as March 2018. If there's an export happened on or after 14th March 2018, 14th March 2018, 2 years from that date becomes 14th March 2020. So from 14th March 2020, extension has come because of the Supreme Court judgment. It means you can still try applying for refund of ineligible inputs and input services used in relation to exports from 14th March 2018 onwards, because one of 2 years time limit plus of the Supreme Court extension. Now, whether Supreme Court judgment for extension is only for appeals only now. Why are we talking about refund application here? And that matter has now been settled through Madras High Court judgment in the case of GNC Infra LLP. There is also a Bombay High Court judgment recently in another issue, wherein it has been clarified that the Supreme Court extension given because of the COVID extension is applicable for both judicial and quasi-judicial proceedings. Quasi-judicial proceedings includes refund proceedings also. There are established precedents for it, because in a refund application, what's happening? They issue before they decide on the refund application, they have to decide on the matter first. decision itself means adjudication only. It means they issue show cause notice if they want to reject it. They ask for replies from us, then they decide. So it's basically a quasi adjudication proceeding. So even refund applications will be extended till the Supreme Court extended period. It means if somebody has lost refund because of time limit general, they can apply this GNC infra case and also a Bombay High Court judgment and the Supreme Court judgment to apply it again. Then the second one you also can apply in the context of the general Supreme Court. And of course, in fact, in Tamil Nadu, there is one TNVAT, there is a provision where they said revocation itself will come under quasi-judicial proceeding. There is a TN in Tamil Nadu GST, the commissioner issued one clarificatory circular where it was on the question of whether revocation can be applied today for registrations which were cancelled about 1 year back, 2 years back. Time limit is over, right? Can they apply? The answer was yes. From the Tamil Nadu GST circular itself, it said that yes, we can apply it for revocation proceeding also. So when revocation proceeding itself is covered under quasi-judicial, in fact, the government, the CBIC's circular itself deems refund procedure as a quasi-judicial proceeding only. There are enough precedents, judgments, binding nature can apply in this context. So you can try applying from the previous periods also, number one. Now, the next question which comes in is that, can I apply? Okay, I think one question has come. I'll just. So second proviso to subsection 3 of section 54. There are 2 points I would like to highlight here. One is at policy level. I'll have to tell 2 things. At policy level, is this point addressed as regards export is concerned? I'll come to that second proviso before I'll just explain this point. So again, second proviso will not apply to make it because it talks about refund of input tax credit only. Okay, so it doesn't still talk about the ineligible input tax as such in that particular provision. So it only talks about the inputs. So what we are claiming is not the unutilized, because proviso is extended. That proviso is applicable for subsection 3, and subsection 3 is focused on unutilized input tax credit related refund. So the restriction of that proviso will also apply only to the refund of unutilized input tax credit, not in the context of the ineligible credit, ineligible taxes refund, number one. Number 2 is at policy level, in a way this has been addressed from 1st January 2021. In a way it has been addressed because from 1st January 2021, they have brought this scheme called road tape scheme. That is remission of duties, taxes embedded in the products for all the products. Many of the products they have notified. One of the objectives of road tape scheme, if you look at the objective of the scheme, it will talk about this scheme is to compensate exporters as regards the ineligible taxes, blocked credits, which is embedded in their inputs or input services. This is at policy level. Yeah, policy level from 1st January 2021, it has been addressed. But then policy level percentage only they have told. In fact, road tape scheme has to be technically on actual cost borne basis, because actual cost cannot be determined. They have gone on percentage basis, which many industries feel could be less than the actual cost they are incurring. So though there is a policy level, compensation has been given, that is legally here, GST wise, it has been sanctified, wherein you are allowed to claim refund as regards this, because road tape scheme does not compensate only that. It also talks about petrol, diesel, the embedded cost in that. It also talks about other non-GST cost, which is also included. So though road tape scheme is also kind of trying to address this blocked credits scenario, it doesn't convey a legal sanctity here. Nowhere in the GST provisions, it doesn't link it to the road tape. Maybe the government may think of bringing this amendment at a later point in time. If let's say some of us go for refund and the matter might get settled at, in our view, either at tribunal level, not at Commission of Appeals level, but definitely at tribunal level will get settled. And because there are precedents under the erstwhile excise law provisions also, where the same refund has been sanctioned. So there could be a fair chance the government may amend the rules, removing this provision, considering road tax has come, or they may say, if you claim road tax, you cannot claim this. Maybe, we don't know. That is still highly hypothetical. But then, as it stands today, in our view, this could be a potential possibility for advisory to clients. And also, preferring application does not cost us anything, but rather, if it leads to a productive conclusion at higher forums, then naturally this could be one of the good saving points for the taxpayers as such. So that is another. This is one of the points as regards the exports, which we may have to look at. Another, I'm talking from the general perspective. So one is this issue, which was we are just talking about. So ineligible ITC. The second one was there are quite a few issues which are going on related to, see, what is happening now is the exporters are not satisfying their export obligations under the erstwhile EPCG licenses, or they don't satisfy advance authorization license obligations, or ocean freight, or so many other service tax audit is happening now. And because of that, they are kind of forced to pay the old Senvat credit CVD, or they are required to pay the erstwhile service tax, etc. Now, all those cannot be claimed as Senvat credit now because time limit is over. But however, there are no precedents in even Chennai Sestat and also in Delhi Tribunal. In fact, we ourselves have a precedent at Commission of Appeal itself, wherein they have allowed refund of the RCM, or even for that matter, the customs duty, CVD paid. If let's say they paid CVD now because of default of the EPCG license, or they paid service tax now because of the default of the non-payment of RCM, etc. All those are now being allowed as a refund under section 142(3) of the CGST Act. So CGST Act 142(3) says that refund of Senvat credit, if the claim is preferred before, during, or after the GST appointed day, will be eligible. So based on section 142(3) of the GST law, refund has been sanctioned in this regard. As regards, there are so many transitional issues going on. This is, the matter is now also at, in fact, it's a Coimbatore association only, Circlo International or something, and also in fact, this has been supported by Madras High Court judgment. Also, this relied on Tara exports. There's a Madras High Court judgment, though that was on a different facts. It has also been relied to take a decision on this matter. So if you have some old defaults for which tax has to be paid now, I'm talking about input side, not on the output side. In those cases, the section 142(3) and the saving clause section is there, which is section 174, can be applied, 174(3), which protects the interest of rights of the taxpayers also. So that is one provision which has come up. That is also applicable for any EPCG defaults or service tax defaults, etc. And next issue, okay. Now, one of the significant, announcement in this budget was the government's intentions that SEZ will be phased out, and there will be new set of legislations and state government's involvement as regard SEZ is concerned. So there is a potential, modification, I would say, revamping of the SEZ. We all know that SEZ, kind of becoming now in the sunset clause, including EOU. In fact, there are clear indications that EOU concept or scheme may also be phased out. So because of India's case, which has been lost at the WTO regulations, there are fair chances the EOU may also be scrapped. When SEZ itself is getting revamped, we expect EOU to be scrapped. And in fact, EOU as a concept now does not have much benefits, because now, except for imports without duty, local procurements also attracts duty, though refund is given. It's a very complicated mechanism. So the EOU may also face its extinction at some point in time. There are sunset clauses introduced in Income Tax Act also. So income tax benefit is not there. SEZ income tax benefit is getting, that's also not there if it is, let's say after 2022 end, and EOU may be removed as part of the foreign trade policy. So then what else are we looking at? How the ease of business, or what is the alternative mechanisms? That's where the government has brought in this bonded manufacturing rules, which is basically called MOOR rules. It's basically manufacturing and other operations rules. So that is a replacement scheme that has been brought in. Maybe some of you might be aware of this rules. So there is basically manufacturing and other operations in warehouse rules. And this is going to be, in our view, would replace EOU in some years, maybe immediately also. Of course, SEZ is more of a tax saving issue that may not be fully replaced, but then this bonded manufacturing scheme is picking up in a faster pace now. In fact, only in the last 6 months to 1 year, this is getting picked up heavily. So what is happening is these rules. So if you have some people or some clients who are more focused towards, let's say, import exports, domestic is also there, but they are also doing importing, and they are thinking of using advanced authorization license. They use EPCG licenses, or they also use DFIA licenses, etc. These cases, and they also claim special rate of drawback, SBR drawback. All these claims are there. All these we expect in some days, or maybe in next few months, when the new foreign trade policy is getting announced, might get scrapped, or might get, there are alternate options being evaluated. For all these things, the one replacement option which has been visualized is this bonded manufacturing. So it is basically a license which is given, which enables the importers to import whether raw material or capital goods without any duty, a customs duty, and also IGST, no GST, no customs duty, and it defers the customs duty and GST till the date that the FG is manufactured and sold. Now, if the FG is manufactured and sold locally, you pay the IGST and customs duty when you are selling the FG, but not for the FG, but for the raw material included in the FG. When the FG is exported, no need to pay duty at all. So basically, this would replace EOU, effective in terms of scheme. This would replace advanced authorization scheme. This would also replace the special brand rate of drawback scheme, which, okay, it may not replace, but rather it can be a good alternative to those kind of schemes. So here what is going to happen is, there is no duties on import. I repeat, this is not a scheme which is beneficial for exporters alone. It is primarily, in fact, a scheme which is beneficial for local manufacturers, importers and local manufacturers. The exporters also getting benefit, of course. No duty on import. So pay the import duties on raw material while clearing FG. So this is what this scheme says. So you have to look at this as a structuring option. So nowadays, as CS, we are also expected, or we can advise on certain value-added options. This is one of the value-added options. Looking at the structure of the importer, exporter, or even the domestic manufacturer, you may think there is a scheme or option which can be suggested for. So this is paid import duties on raw material while clearing the FG, and of course no interest. This is a very important point. So there is no interest for this period. You don't have, technically you should have paid on day one. Let's say your conversion into FG, and you're going to stock the FG and you're going to sell the FG after, let's say, 2 months or 3 months. For these 2 months or 3 months, you don't have to pay any duty at all. So this is a very maybe a working capital savings for a major importer manufacturer. It's going to be a saving. I repeat, it should be a manufacturer. If it's going to be a trader who buys and sells, then only 3 months maximum time is allowed. Otherwise, if the lead time of import and sell, because there are companies who, based on seasonal, they do a lot of imports, or they do bulk imports for a price advantage. In those cases, this is one of the better schemes. In fact, most of the companies are looking at this option in a very serious way. Though it was 2019 scheme, it has getting popularized only from 2021, I would say, mid or end onwards. So no interest for this period. So at the time of sale, you pay the duty. Okay. Now, if the FG is exported, then again no duty on raw materials also. That means the entire chain becomes duty free. Of course, you don't get any duty drawback. Why? Because you don't pay any duty at all in the first place. So the entire chain becomes duty free, and all these are self-assessment only. Okay, there is self-assessment. There is no department officer. There will be one time, of course, first time licenses, there will be control checks, etc. will be done with the officer. But after that, it's just like GST, or I would not say just like GST, but rather it's more like self-assessment. We ourselves file all the compliances by the warehouse keeper. So whenever you have someone, of course, can I import capital goods? Yes. No duty on capital goods also. There's no. So that's basically replacing your entire EPCG scheme. That's what we are trying to say. So even if, see, another disadvantage in EPG scheme is it comes with an export obligation. So what happens? Many exporters, in the interest or the excitement of getting duty benefit, they import under EPCG, and they end up not meeting the average export obligation or specific export obligation. So this scheme does not come with any export obligation. So there's no export obligation in this scheme. You can import capital goods without duty and keep it in the bonded warehouse. Okay, what is the catch then? If all these are benefits, there has to be some kind of trade-offs. Pros and cons will be there. Now, for these capital goods, it's not waiver, it is only deferment. It means if the capital goods is sold, let's say after 5 years, 10 years is sold within India, that is in India, then pay duty. It was deferred, they pay duty, originally not paid. Can I claim depreciation benefit and all? No, because it's basically deferment only. Let's say somebody is doing a huge expansion, so it's a good opportunity for them. So they're doing expansion and they're importing a lot of machineries into India. They can go for this license, save the duty on those licenses. That's going to save them, let's say, capital goods, they would save roughly about 20, 28, 25%, 18% GST plus about 10% customs duty, so 28 to 30% will be saved. Of course, I would say it's getting paid at the time of later sale. But then one advantage is if the CG is not sold in India, but rather if the CG is re-exported, there are companies who are re-exporting it abroad as a scrap or as capital goods after usage, after 4-5 years, then no duty at all. So it means there are options to avoid duty also based on the planning which has been carried out. So now, should the capital goods be used for exports? Not required. No such condition at all. So there is no export obligation, is what we are communicating here. So this is one of the effective structuring options which has been now looked at, especially for somebody who is doing imports primarily. If somebody is doing more on exports, there is no imports at all. For them, it's not a big scheme because there is no imports. It's primarily looking from import and domestic manufacturing angle, or import and export angle, not from procurement from domestic and exports. So for them, of course, the scheme is not required. Even EOU, for that matter, is not required. And of course, another point is road tape is not eligible for now. Just like advanced authorization license, any of these, if you're going for any of these license, there is no road tape here. So the same principle is applicable for now. Of course, expected to change after recommendation. So this is what is the basis of the scheme. So if you have people, though government has clearly signaled in this budget that SEs is going to be phased out, or alternate legislations are expected. EOE, in fact, the Foreign Trade Ministry has been quite vocal in saying that we are expecting revamping of all these schemes. In such a case, in such scenario, road tape itself has replaced entire MEAs, etc. We are looking at this as one of the effective alternate structuring option available for a exporter and an importer. So this is something which, as I would say, a chartered accountant, more than a chartered accountant, as someone who is a business enabling person who helps businesses, we can kind of look at advising our clients in this regard. So primarily this budget, of course, been dealing. There have been a lot of talks on the ITC side. The budget also has focused on ITC side, but then these are all only, I would say, it is like it's like in the air. It might become law, or it might be deferred, or maybe after people settle down, it might be slowly introduced, etc. But then there has to be some clear representations happening on this regard. So the intention of the government is to secure the revenue of the taxpayers. It's absolutely correct. But then it cannot cost the genuine taxpayers trust. It cannot be at the expense of the trust of the genuine taxpayers. So we may expect deferment of all these provisions for some period of time. Of course, most of you is aware that whenever there is a check post detention which is happening, then now the tax is not required to be paid, but we are required to pay 200% of the tax as penalty. So again, that's a big impact for genuine cases, may lead to potential issues at the check post. But then there is a Supreme Court judgment very recently on this matter, where they in fact levied cost. In fact, they increased the cost on the department officer who was deliberately withstood. And the Supreme Court judgment is clear in saying that if there is no intention to evade tax, if there is a mistake, wrong route taken, or expire, in fact, in that case, it was an expiry. The e-way bill expired and they could not renew it within time. So because of protest and other reasons, so there are genuine reasons available for expiry, it could not do, etc. In those cases, the Supreme Court is quite clear in saying that it cannot be treated as mala fide intention, and hence you cannot impose the 100% or 200% penalty as it is now. You may levy a general penalty of 10,000 rupees, 5,000, 5,000, etc. So this is a request maybe to bring this to the knowledge of the taxpayers, so that they are quite informed as regards these particular provisions are concerned. So as in my view, more than chartered accountants are not merely the tax advisors, but rather we are more of enabling the businesses to happen. In fact, our advice can really make up strong businesses, and of course, with the commensurate fee has to be charged for the same. So these are all some of the value-adding points which we may look at during the course of our discussions with the taxpayers. So on this note, let me conclude my the continuous rant on this subject. Any specific discussions or inputs or thought process you can share.
Thank you, sir. Members, do you have any doubt, or if you want any clarification, you can ask the speaker. Or you may give it in the chat box. The doubt illa potta. Chairman, conclude panikalama. So on behalf of Tirupur branch of SARC, I convey my great thanks to today's speaker, CA TR Srinivasan, who accepted our invitation immediately and enlighten our members on the indirect tax proposals in Union Budget 2022. Not only in that, on various areas of GST and customs, so which will be more helpful for us in our regular practice, which will also be useful for our clients, because our city is export and import oriented area. So I think today's session will be very much useful for our members to enlighten your knowledge and to advise your clients. Thank you, TR sir, for accepting our invitation and enlighten the topic. And I also thank all our members who joined for this seminar through this virtual mode. And I also thank our branch staffs who made arrangement to conduct this seminar through virtual mode. Thanks. Thank you all.
Thank you, sir. Thank you, TR sir.
Thank you, Murugesh sir. Thank you for the members.
Yes, sir. Thank you, sir. Thank you.